Hi you guys, Megan Turnipseed here with Turnipseed Realty Network. I've got Nick Pronsky here with the Pronsky team from Legacy Mutual Mortgage. And he has just a couple things to keep us up to date about what is happening with interest rates and what that means for home affordability for now and into 2017. So tell us a little bit what's happening.
Well, we just got done with November, and November was one of the craziest months we've seen with interest rates in a long time. Mostly due to the results of the election. After the election happened, we saw rates go up approximately 0.5% on both conventional and government loans. It was the worst month for treasuries and bonds that we've seen since 2013. So as a result, you've seen the monthly payments rise quite a bit. If you're talking about a $300,000 house, that's about $80 a month more that you're paying on your mortgage payment. So the affordability issues are pretty tough. The reason for what we've seen is that investors are speculating that with Donald Trump in office, with a Republican-held House and Senate, they're forecasting more government, more federal spending. They're forecasting more economic growth, and which will lead to more inflation, and which will lead the Fed to increase rates at a faster pace. So as a result, we've seen a lot of this speculation lead to a drastic rise in interest rates. So as a result of that, you see some buyers a little nervous, and the most common things I see are the two rebuttals from buyers is that the price of that house is too high, or I want to wait and save up a little bigger of a down payment. And my personal opinion, which we discussed recently, is that it's still an excellent time to buy right now. The general consensus is that interest rates will continue to rise. Whether that's in the next month, 6 months, year, 2 years is impossible to predict, but they are going up. And as a result, the time is now. So what I've done is put together two different examples to where you can say, let's say prices did drop 10%, and at the same time interest rates went up 1%. So instead of a $300,000 house, you're buying a $270,000 house, but your payment is now higher because rates went up 1% during that same time.
Wow.
So you save $30,000 on the price of a home, but your mortgage payment's higher, which when it really comes down to it, if you're buying a house as a long-term investment, it's all about your budget, what you're spending each month. That's truly important. And then also another option is saving more money to put down. So let's say you have 5% to put down now and you could buy, but you wait a year to save another 5%. So you can put 10% down. But in that year, if rates go up 1%, your payment is significantly higher, even though you put 10% down instead of 5%. So what I'm telling a lot of the clients I work with right now is what you're investing in is interest rates, because although they've gone up in the last month, they're still at historically low levels, and we may not see these again. So what you're really investing in is the interest rates and your monthly payment, and it's a good way to lock in a low rate and have that have a good impact on your budget.
Okay, so we want to pay more attention to the interest rates than maybe a $10,000 or $15,000 increase or decrease. We're going to see more impact with those interest rates.
Absolutely, it'll save you more money each month, and that's what it really is all about, is maintaining your budget and your expenses each month.
Awesome. Thank you so much, Nick. I appreciate it.
Thanks for having
Hopefully
me.
this was informative.